So we are right in the thick of earnings season, and some of the Magnificent Seven stocks are obviously doing magnificently, but there is a Mag 7 stock that really is just not doing well at all, and now folks are starting to say you might want to run from it. Now, as you guys know, right here on this channel, Wall Street has lots of opinions on a lot of these sort of things, so let's see exactly what they're saying and let's separate the truth from the hype. Let's get right down to what's actually real, what we should be thinking about, and obviously what is just either hype or complete trash from Wall Street. And sometimes they get it right, but sometimes they don't. So let's break all that down today, right after you hit that like button, if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. Might make some of you guys upset. I apologize in advance, but that's been this channel from the start. That's exactly what we're going to continue to do. And it has paid off very, very well over time with actually all the stocks that we're going to discuss today. It has paid off incredibly well. And the earnings flash sale ends soon, where you got to see all those buys in real time, where we've made money on both of these stocks, a lot of money on both of them. Get your free coaching, get your free courses, have direct access to me. If you're ready to get serious about your investing, check it out. It's the pinned comment down there. But let's jump into the video here and see exactly what Wall Street's saying.
Several big tech names are reporting earnings this week. To discuss the outlook for the Mag 7 and big tech, we want to welcome in Daniel Newman, CEO of the Futurum Group. Daniel, it is good to see you. I can't think of a better person to have this conversation about the Mag 7. It feels like
it's like a skinny Stone Cold Steve Austin, isn't he? I don't know. That's just the first thing that popped in my head when I saw him. I was like, whoa, it's Stone Cold, just skinny. I don't know. Anyways, back to the video here. Way off topic. I apologize.
Even what we've seen so far, out of just two out of the gate, we are seeing that divide, right? That bifurcation between the winners and we'll call it laggards. I don't want to call them losers. Tesla really feels very bumpy. They missed expectations. I know you have some thoughts on Tesla. What's your thought off the back of it, especially when Elon Musk saying, you know, basically prepare for a few rough quarters or some rough quarters?
I like that you use the word diverging and bifurcation, because we're definitely seeing the same thing in the Mag 7. Elon Musk and Tesla isn't traded as a company based on its fundamentals, based on EVs, based on automotive. There are some institutions, traders, and analysts that they kind of rate it that way.
Yes.
But if you actually look at the way investors think about the company, they're thinking about autonomy, robotics, AI into the future. So the EV thing is sometimes like this lagging story, because for some time now, its business on the car side has not performed up to any level that really justifies $1 trillion valuation. Having said that, when you think about the future, who's going to win the race to autonomy, physical AI, you certainly hear Jensen and Elon talking about this multi-trillion-dollar future. Investors are betting on the long term here. They're betting that Elon Musk is going to figure this out, that he's going to be able to drive robo-taxi to $1 trillion valuation, that he's going to be able to build the energy business in Tesla. And I still think there's a little bit of a belief that he's going to be able to wrap a bow around all of this: SpaceX, XAI, Boring Company, Neuralink, Tesla, and that somehow this is all going to tie together. People are betting long on Elon Musk's ability to do something much bigger than EVs. But fundamentally, I rank them dead last in our Mag 7, because it's just a tough stock to own unless you have a very long future and you're willing to hold on for a long time.
Yeah.
All right. I like the way he kind of framed that there a little bit. In regards to the earnings, I actually put out a long video, almost 30 minutes. Actually, it was around 30 minutes, right around 30 minutes to my group members there about the specifics all the way going through the entire earnings call there. It's just, you know, there's a lot of problems right there. Even when we get right down to what is the opportunity with robo-taxi and things of that nature, you can do the actual math on what happens if they actually overtake Uber and Uber just goes away tomorrow, and it just doesn't add $1 trillion to the market cap. Just doesn't. There's no way to mathematically get there. And by the way, it's not going to kill Uber completely. Definitely going to be a competitor with Uber and all the other you know, folks that are trying to jump into the race as well. But it's not going to kill Uber anytime soon. Definitely not in any time frame that we typically look at here, where you're not having to speculate, and I mean pure speculation, to get yourself there. So there's a lot of things of that are future things coming. And like he said, you've got to have a really long time horizon with that, because it is going to be a rough next few quarters for Tesla. There is not a lot of good things on the horizon. There is not things that are coming. I know there's a lot of Tesla fans out there, and I'm a Tesla fan too. I'm an Elon fan, but to say he always delivers isn't true. To say that they aren't struggling right now as a business isn't true as well. There's a lot of problems out there, and unfortunately, the excuses have all run out, and they've gotten very, very into just their excuse making to excuse making. Everybody sees right through the excuse and just goes, "Hey guys, you just aren't executing right now. Can they turn that around? Of course they can, absolutely. But have they yet? No, and it's going to take time to do that. And when you're looking at a stock that's already trading 5 times richer than the rest of the Mag 7, 5 times, guys, that is a lot. There's too much priced in at this particular stage. And unfortunately, when you're looking at performance out of the Mag 7, they have not just been the laggard, they are the dog of the group right now. Now, can that change in the future? Of course. But the rest of big tech has boomed the past 2-3 years. I mean, when Apple's numbers dwarf your numbers and their growth numbers look better than your growth numbers do, that's a problem. You definitely are struggling as a business. Now, again, it doesn't mean you can't turn it around. It doesn't mean that a lot of things aren't coming. But as I started putting together a lot of the math with everything going on with Tesla right now and what those future potential things could be. Now, remember, if we're talking about 10 years from now, 20 years from now, that's pure speculation, guys. You can't invest today based upon that. And nobody on Wall Street is paying today based upon that. That's silliness. That's YouTuber talk. That's X talk. That is not anywhere in the realm of how any real investor talks. And more importantly, we've talked about this with Tesla before. In order to get that 2 trillion, 3 trillion, Elon says 20 trillion. I understand. Yeah, roll your eyes. I understand. But just to get to 2 trillion, you need institutional investors. That is not how they invest at all. That is not what they do. Those big $1 trillion sitting on the sidelines there where they come in and they scoop up great companies. Think about Apple and how much they haven't fallen despite the fact they've kind of lagged performance, because Apple gives those investors exactly what they want. That's why that price hasn't fallen off the cliff like other companies have from time to time over the past 3 or 4 years. It just hasn't happened because those institutional buyers step in and keep that price high every single time Apple dips down. That's not the case with Tesla. It's the weirdest large cap, mega cap stock I've ever seen in terms of how it trades. The institutional owners are much more hedge fund institutional owners. They are not those big long-term hold funds that tend to stabilize a stock. That's not the institutional ownership mix of Tesla. Of course, you have the index funds and all those, and that's what people point to. You got to look all the way through the entire mix and analyze those sorts of things. The bottom line with all this is when you look at the Magnificent Seven, 6 of the 7 have performed incredibly the past couple of years. Wonderfully, executed wonderfully, numbers going up, growth rates going up, profits going up, everything moving in the right direction. There's only one where it's moved in the opposite direction, and that's been Tesla. And oh, by the way, those companies are all doing that despite the fact they've boosted their AI spend to ridiculous levels, and they're still printing off massive profits, massive cash flow, massive everything else. I'm not saying Tesla can't turn around or anything else of that nature. I'm just telling you, when you got to look at these sorts of things, you're paying, 150 plus multiple, 160, whatever the heck it is, for Tesla, and you can get the rest of the big tech, in the 20s and 30s. That's just the reality of the valuation and how far stretched Tesla is. And even if some of these things actually come true, and oh, by the way, a lot of the timelines they were giving for these things are 2 years from now, 5 years from now. That's Elon time, which means it's going to be longer, right? Sorry, just what it is. That is where we're sitting with Tesla. Now, I'll talk about here in just a little bit what I think could be the big helper for Tesla here, but it's not going to be any of the things that a lot of you guys are thinking about out there, like robo-taxi or any of those other things. Again, I don't care if they could spread out to 25 cities. If it's not putting money down to the bottom line, which is what matters, that it just doesn't matter, guys. I'm sorry. Same thing. Somebody was talking about Waymo and, hey, why don't I ever talk about how Tesla's coming to eat Waymo's lunch and how that's going to hurt Google? And I'm like, Waymo doesn't do anything for Google's financials right now, because it still hasn't gotten to that point yet where it's print money to the bottom line. Guess what? Tesla's going to be in the same exact spot for the time being. That is part of how you scale things out. People keep thinking things are going to happen this quarter, and then this quarter this is going to happen, and then it's going to add $1 trillion. It's just silliness. That's speculation. It's a product of the market we're in right now. You've got to look beyond that. Look hard at the data. And like he said, if you're into Tesla, understand some of those big things that people are pricing into the stock are years away, not months away, not a year away, years away. And that's according to Elon time. So we all know it takes even longer than that in order for that to happen. And if you really dig in the earnings call there was 4 or 5 signs there that tell you it could be longer than even some of the more bearish people think some of these things are going to happen. So Let's jump in and see what else he's got to say here.
And look, it's at the bottom of the list in terms of performance this year for the Mag 7. Yeah. So, so not surprised that when you think about it, you have to, it's clear for those who are believers, you have to be a believer in the future of it. And it's hard not to see it valued without taking into account now, I mean, what the current landscape is, because you kind of have to, for at least the next few quarters, incorporate that. But let's talk a little bit about Alphabet Google. It feels like it's like a sigh of relief there with regard to its earnings. There was this big concern about AI cannibalizing search. That was not the case with this most recent quarter. They beat expectations on both the top and bottom line, but they are leaning into CapEx further, and it seems like the street's okay with that now. What's your thought on their latest results?
The street should always have been okay with it. Alphabet generates $75+ billion a year of cash flow. It's got a very strong core business in ads. YouTube is a rocket ship. Its cloud business produces income. They have to be making long-term bets. They have to be investing in Waymo. They have to be building infrastructure for the future. The Alphabet story is often misunderstood, though. Alphabet has this deeply integrated AI stack that is so valuable. They've been doing custom chips. So we hear about possible competition for NVIDIA. Well, I think there's more of this kind of internal, external workflow of where those custom chips and the Broadcom chips end up going. Google's ability to build the stack, build Gemini Advanced, a very highly performing model on all of their own infrastructure, is a unique differentiator that will give the company a long-term advantage. Last thing I'll say, and I think is really important, is search will be cannibalized by generative search at some point. But I think Google, much like Apple, has a road ahead of it with its iPhone install base to get AI right. Google has the vast majority of people, as you saw the numbers still going up last quarter, using traditional search, and now they've got AI overviews in their search. They've got AI baked into all their other products and services. So maybe some of the early OpenAI defectors are going to leave and never come back. But having said that, most people are still using search, whether it's in your iPhone, built right into it, or our friends, uncles, and brothers are still on it, and now AI is baked right into it, so they're getting that generative experience.
Which I do.
That's right here on this channel. We know nothing should surprise with Google. Google has executed wonderfully. Search hasn't been dying. That's just a Wall Street narrative. I don't know why anybody believed it. All you gotta do is listen to the earnings call. That's why I preach it so much. Listen to the earnings calls. Look at the actual numbers, and you'll see that that's a laughable statement. And oh, by the way, by the time AI does start, their own AI starts to cannibalize their search, it's going to be one product. It's going to be one thing that goes all the way across the spectrum there. They're going to transition all of us there to that product. It's going to probably happen in the background without us even really knowing. We're just going to go from searching to somehow it's all kind of integrated together there. That is what they're aiming for. That's what they're targeting. And that's exactly how you execute, and you continue to see search grow despite all the AI noise, despite all the ChatGPT noise and the Grok noise and all the rest of that sort of stuff. It's sitting there crushing it. That is called execution on an incredibly high level when even the Wall Street folks can't figure out what the heck's going on. Now, they're not the smartest ones in the room, but typically they tend to figure it out. But sometimes even the Google bulls get that wrong sometimes, and I just find it laughable. It's like it's right there in front of our faces. It's slapping us. It's just called basic execution on a plan. And yes, they're not out there putting out 5,000 pretty presentations. When they did, their presentation was silly, not their strong suit anyways. But I don't care as an investor about presentations. I care about the bottom line. I care about growth. I care about profits. And unlike Tesla, unfortunately right now, we are seeing Google hit on all cylinders, but yet it's still undervalued, significantly undervalued, which is kind of the reverse scenario where Tesla, where it's significantly overvalued. Even if I just count it as just simply a tech company, screw the talk about it being a car company, regardless of how you feel about that. As a tech company, nobody's trading at 150, regardless of what their growth rates are. It's just not happening. But yet there's Tesla doing exactly that. So these are the type situations you find yourself in as an investor where you just simply take advantage of the market and it doesn't make any sense. And whenever I see people complain that, oh, Luke's picking boring stocks again. Oh, there he is. Oh, same stocks over and over and over again. Guys, we've been having that conversation every time I put out my list. It's just kind of the way that it works. People were complaining that, why do you always have SoFi on your list? Why is Meta always on your list? Why is Palantir always on your list to buy? I don't know, because they were undervalued for a really long time, so I kept buying them. That's why. You want to keep Google undervalued for a year? I'm going to keep buying it. Yeah, all of a sudden Amazon falls down. Yeah, I'm going to buy Amazon because it's a great stock. I'm not trying to chase the next 10x this and trying to figure out what Wall Street bets is going to give it. That's 2021 garbage. That never ends well in the end. I just want to find those undervalued gems, whether we're in a hot market, a down market, whatever the case is. Sometimes it happens and it's in, the Magnificent Seven where you're getting the deals. Sometimes that happens. Other times it's more in, small cap stocks or mid cap stocks. It's different all the time. Sometimes it's in dividend plays. Heck, we're up, over 100 and something percent on our JP Morgan buys. A boring bank stock that trades at a multiple of like 10 or 11, It's just, that's what the market gave us at the time. So that's exactly what we bought. And we made a ton of money on them. I don't get to control what Wall Street does and what goes on sale and what doesn't go on sale and how long it stays on sale and all that sort of stuff. I don't get to control any of that. I only get to control my plan, my valuations, and then my price targets, and then executing to my plan and my valuation and just taking what the market gives me in the end. During 2021, when everybody was chasing everything else in the world, to include Tesla, which we're talking about today, there was Apple at 115 bucks, 110 bucks, whatever the case was at that particular point in time. That's what I scooped up. Hey, 2022, guess what? Kind of flipped on us, right? Palantir went from 40 down to 6, and, SoFi went from 20 down to 4. And obviously we saw Meta fall from its highs, 350-ish or so. Maybe it may have been close to 400, all the way down to 80. Google all the way down to 80. Amazon all the way down to 80. They all kind of fell at different times, but they ended up giving us those deals at those particular stages. And you just simply scoop them up, follow your plan, and move forward. Obviously, if you like the stock, if it fits your goals and all that sort of stuff, you don't have to own them all. But that is simply how you execute as an investor, and more importantly, ignoring Wall Street. Even if the guy looks like Stone Cold, still got to ignore them and just basically do your plan, do your evaluation, and do exactly what's best for you in the end.
Like that they do that now, that it's not like you don't have to separately go to Gemini. You can go straight to search and get a little bit of this AI overview. I like that. When you look at and I'm glad that you brought up Broadcom, because it is catching a bid today off the back of Alphabet Google's latest results, and some argue that it should be in the Mag 7, or let's call it Mag 7 plus. Yeah, right? So you point out that, big tech has this make or break moment for the rally, right? We've seen, both the NASDAQ and the S&P 500 hit new highs. What do you mean when you call it a make or break moment?
Well, so far the numbers that have come out have been supported because Tesla wasn't a surprise to anyone. Everyone kind of knew those numbers weren't going to be particularly good. But we've heard this CapEx boom. We've sort of seen the rally. We're getting that frothiness. We're hearing meme stocks again. People are chasing the kind of quick wins. Mm-hmm. It's all kind of set on the precipice of good, solid, fundamentally strong companies. So when those start to break, the stuff at the bottom breaks really, really hard. Mm-hmm. So when you start to see things rallying 10 and 20% in a day that aren't even companies with fundamentals and business, Krispy Kremes, mm-hmm. you start to go, okay, if all of a sudden the CapEx numbers start getting pulled back, if all of a sudden, Google's performance, search is getting crushed, Meta comes out next week with bad numbers, Apple's phone numbers in China and around the world are starting to depreciate meaningfully, everything falls, the dominoes fall with it. So we've got all this kind of euphoria and this exuberance in the market right now, but I still think it's based upon the big, strong, foundationally sound companies executing. And so far, like I said, with the exception of Tesla, it has looked good. And like the IBM, ServiceNows, the enterprise businesses are looking pretty good too.
It's so funny that you mentioned that if about Meta. I can't even see Meta.
Missing?
Yes, I mean I know that's for the sake of argument here, but that feels like that one's a stretch, especially given its outperformance.
I mean, we see Meta right below NVIDIA, so it's kind of NVIDIA then Meta for us. Mm-hmm. We love how they're applying it. We love the fact that he's betting big on this talent. He's racing for that $20+ trillion of productivity that's going to come from AI. He's basically like a sports franchise. He's like the Yankees right now. He's saying, look, we're going to win the World Series, and we're not going to win it by only building the best tech. We're going to go steal the best people. And if talent is the key ingredient, who's doing better than Zuck right now in terms of winning that race?
All right, we'll go ahead and stop the video right there. Finishing up right there with Meta. This is what happens when you have a business that prints money. You can go out and you can do this sort of stuff. I know a lot of folks are upset. I've seen some very much like, Zuck's not good. He's only getting out there. He's just buying talent. He's just buying his way to the top. Doesn't freaking matter. I own the stock. They print off enough money to do this and still print me money in the end. And if they end up capturing those trillions of dollars that are out there in this race, awesome. That's good for us as shareholders. That's exactly what I want them to do, is go out there and poach talent. By the way, that's been going on in big tech forever. So it's not like this is new or unusual. It's just the latest narrative that's out there. You got to learn to ignore that sort of stuff. That's exactly why I own Meta. And hey, he made some good points too about the market being speculative right now, and he's right. And he's right. Whenever we have any sort of a bumpy road or whatever the case is, they're going to crash, just like we saw in 2021. Will it be as violent? Well, we aren't as hyped yet as we were back then. But when it happens, it happens. And who's going to set it off? Nobody knows. It may very well just be declined earnings, or it might very well be just the trade is over with, right? Wall Street moves on to something else, and all of a sudden those names come crashing down. Well, there's a myriad of things that could happen that create that scenario. I just know I don't want to be holding junk. I want to be holding great things, and more importantly, when they go on discount, because it seems like Wall Street just seems to get dumbed to the upside and to the downside as well. That right there is where you make your money. So I'm excited for it. I hope it happens. I want to see it. Sorry if you're out there speculating. I don't know. It's not my style of investing. I apologize. It's a losing bet over the long run. It's always proven that way. It's not like this is new. Meme stocks aren't new. They just weren't called meme stocks back in the day, right? Something very, very different back then. But it's happened throughout the history of the stock market, and it's going to continue to happen. Again, you got to be able to decipher the great investments from the trash. Understand people are going to be making more money in the short run, but over the long run, they're always going to end up being the losers when they're out there speculating. Now, let's discuss Tesla here a little bit in regards to what I think will be the saving grace per se with Tesla, because there's not a whole lot here in the short term that can do it. I'm sorry, it's not robotaxi. It's going to get a lot of excitement. It's going to create a lot of tweets, X posts, whatever the case is. All these other people throwing up all these stupid graphs and charts and all this other sort of stuff. The same trash we saw in 2021. That none of it came true, by the way. All it did is just mislead you as an investor. But the one thing I believe is going to really help Tesla weather the storm that is the next couple of years of really rough sailing is if they finally release that lower cost model. They finally get it right, finally get it out there in the wild. No, I'm not buying any of the narratives around why they haven't done it yet. The fact is they're delayed, period. I'm not going to get into that. I'm not going to run down that rabbit hole. You can do your own analysis there on what actually the reality is of that situation. But that whenever it does come, I believe that right there can be the thing that kind of at least stops the bleeding per se, because right now we're bleeding out. Not that they're going bankrupt. They have plenty of cash. They have plenty of other things that they can pull in order to float themselves for years. So that's not that case at all. But we can finally stop that bleeding and start kind of slowly turning around that ship a little bit. That's going to be what it is. It's not going to be robotaxi. It's not going to be Optimus. It's going to be that lower cost model coming out and them being able to actually deliver on a reasonable product there. So I'm looking forward to it. They said the end of this year. We'll see. Again, it was supposed to already be here. It's not. And so we're stuck waiting a little bit there. Obviously, just typical Tesla timeline there. No big deal. But that right there to me is going to be what saves it. Now, where the stock goes in the meantime, it's trading rich right now. We continue to stay in a hot speculative market. No problem. The moment the market cools off or it just kind of goes a little bit risk off, that right there is when stocks like Tesla tend to fall a lot bigger than their other counterparts there, especially whenever you want to run to a little bit of safety. You're going to run to a company that's spitting off a lot of free cash flow, that has positive earnings moving in the right direction, that has positive growth running in the right direction. That's where the money's going to flow. And unfortunately for Tesla right now, they don't fit that category. But again, that's more short term. Long term, we need to just get that new model out as quick as possible. And remember, if you want to see that video that I released there, listen to Tesla's earnings call in real time. Hey, you can go back and watch the replay. We watched it all in real time and called the BS and pointed out the few good things that were good in the earnings call as well. Make sure you check out the pinned comment, get your membership before the sale ends, where you get all that. You get free courses, you get free coaching. Guys, there's so much involved. Just check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.